What if I told you there are bonds out there that you could purchase today, that the interest rate, the return on your investment on these bonds are tied to inflation? Inflation in the United States of America. And with inflation out of control right now and very high, the interest rates on these bonds are 9.6%. Not only is that a nice rate, 9.6% is about the average you can expect in the S&P 500, it's also risk-free. Would that be something you would have interest in? If so, this is the video for you because we are going to be diving deep into Series I bonds. We'll talk about what they are, the rates of returns, the rules behind them, and how to invest in them. Now, before you actually go and buy these bonds, if it's of interest to you, just know that I am not your financial advisor. I'm not giving you investment advice, and definitely do your own due diligence before you start putting money into these bonds. The main topic of today's video are Series I bonds. So let's start off by explaining what they are. Well, these are bonds that are issued by the United States federal government, and they have two rates. They have a fixed rate and a variable rate. And that variable rate is adjusted twice a year based on inflation, the inflation rates on the CPI that we are seeing in the United States. And as inflation rises or decreases, that variable rate is going to be readjusted twice a year so that you don't lose purchasing power on your dollars that you invest in these Series I bonds. The Series I bond will accrue interest for 30 years or until you cash them out. And it's essentially risk-free because it's backed by the United States government. So if you put money into a Series I bond, the chances of you not getting those returns are slim to none. And what's so crazy about these Series I bonds is now the current rate that was just set is 9.6%. So for at least the next 6 months, that is what you're going to witness in these Series I bonds. Also, it depends when you buy them. So if you buy them right now, you lock in that rate for 6 months. There's a chance that the rates can go up even higher. So if you buy them after that rate increase, then you're going to lock in that rate for 6 months. Or you can play a game where you buy it right before the next rate, and then you'll lock in the current rate for 6 months. So if the rate was to drop, well, then that would be a benefit to you. Just to elaborate on that a little bit more, the current rate, which was set in May, is going to be readjusted in October. If you buy the bond, the Series I bond, just before October, you lock in that 9.6% rate for the next 6 months, and then you'll experience the next rate. Now, the Series I bonds cannot be cashed out in the first 12 months. So you are essentially locking in your money for the first year. After that, you can take money out of the Series I bonds, but you will be paying a penalty, which isn't a steep penalty. If you hold it for 5 years, there is no penalty. The penalty that you would experience is you would lose interest of the last 3 months. So if you hold this for a year and then you cash out, well, you're only going to get 9 months worth of returns. If you hold it for 16 months, well, then you're only going to get 13 months of returns. If you do hold these for 18 months and you keep the assumption that the rate is the same, you're not going to get a 9.6% return. You're more likely going to get around an 8.9% return. So your return is still positive. You're just paying that fee of 3 months of interest. There are buying limits, however, with these Series I bonds, and it's for an individual. So one person can buy up to $10,000 worth of these bonds in a calendar year. The first year you buy 10, and the next year you can buy another 10, so you have 20,000 altogether. There are some workarounds. You can buy an additional 5,000 if you actually have a federal tax refund. You can use that refund money to buy up to 5,000 of these Series I bonds. If you're married, you can do one for you and one for your spouse. You can also gift them as well. When you gift these bonds, it goes against the other person's buying limit. So let's say you gift 5,000 to Joe Schmo. Well, Joe Schmo can only buy another 5,000 worth of these bonds in a calendar year. Now, as far as your gains are considered, you're not going to have to pay taxes state or local. However, with the government being the government and being awful, you will have to pay taxes on the interest you gain on the federal level for these Series I bonds. Yes, you are loaning your money to the government. The government is paying you, and then they're taking a tax out of those gains. It's ridiculous, I know, but that's the way the US government works. So, how do you invest in Series I bonds? Well, first, you need to qualify. And to qualify, you just need to be a US resident or a US citizen, and you need a tax identification number, most likely your social security number. You'll also need an address in the United States. You'll need an email. You'll need a checking or savings account. And you'll also need access to the internet to be able to buy these bonds. Now, you can't buy these just from any brokerage. You can't hop on over to TD Ameritrade, Fidelity, Schwab, or any other brokerage and buy these bonds. You have to buy them directly from the US government. And to do that, you're going to head to treasurydirect.com and you're going to have to sign up or create an account in order to buy the Series I bonds, because that's where you're going to purchase these bonds and other bonds that the US government has to offer. When you sign up for Treasury Direct, they're going to send you an email for confirmation. You're going to use that confirmation email to actually open up your account. And then you have access to Buy Direct, which is the part of this website where you actually purchase the bonds. Now, you can purchase it all in one lump sum, or you can take out a little bit and do reoccurring purchases till you get to your max limit, which is $10,000 per individual. The choice is yours, but you're going to buy the Series I bonds on the Buy Direct portion of Treasury Direct. The process is actually quite simple for it being a government website and for you to be buying government bonds. It's not that difficult. You just have to go through the process of creating the account and then heading into Buy Direct and then making your purchase on the bonds you would like. And for this video, we're talking about the Series I bonds. So, in conclusion, this is actually a very unique situation where we have inflation rates out the wazoo. We have then the opportunity to put our money into these Series I bonds and collect at least 9.6% for the next 6 months. What the rates are after that, when they get readjusted, they could be higher if inflation continues to creep up, or they could drop a little bit if inflation is indeed peaking. Some economists are saying that inflation is showing some signs of peaking. I don't know if that's going to be true. It's hard to believe that when you look at sticker prices of pretty much anything out there. And the issues that we see with supply, and that's increasing prices because of supply and demand, those issues don't look to be resolving themselves anytime soon here or anywhere else, and this is a global problem. In addition to that, the market conditions that we have currently are that stocks are crashing, bonds are crashing, inflation is so high, so you're losing money holding cash. There's not a lot of alternatives out there to get yield and to protect your money. So, this current climate combined with Series I bonds paying 9.6% definitely presents an interesting opportunity for investors. And the choice is yours whether you want to buy Series I bonds or not, or continue to invest in the markets, or do whatever you choose to do. But if you do buy the Series I bonds, just know this, because I think this is very important. Your money is locked up for 12 months. After that, you pay a 3-month interest only penalty, so you're still getting gains, but you are diminishing them a little bit by paying that 3-month penalty until you get to 5 years. So plan accordingly, do your own research, but I thought that this was a great opportunity to throw out there. And me personally, I am probably going to be putting money into Series I bonds. I think it just provides a good opportunity for a little bit of diversification, a little safe haven, if you will, during times of uncertainty where stocks, bonds, and other assets are also dropping. Now, if you like this video, then do me a huge favor and hit that subscribe button, ring that bell, and smash that like button. Also, please know that this channel does have a Patreon. On that Patreon, there is a private Discord server where I notify all investors and traders of all of the trades that I'm doing. You'll get a real-time trade alert whenever I open or close a position. We are also using options to our advantage. We are sellers of options primarily, so we're creating our own yield. If you will, in layman's terms, we are making our own dividend stocks to try to collect some yield and hedge our positions during this turmoil that we see in the markets right now. Outside of that, I thank you so much for your time. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.